If you've opened a gold chart lately and felt your heart race without knowing why, trust me, you're not alone. Price action's been wild, holders are nervous, and those who are still waiting to enter are scared they'll pick the wrong moment. But the crazy part? It's not just the numbers or the chart doing the talking this time. The dollar strong, the Fed's quiet, but China's buying gold non-stop. The euro might get dumped, and US tariffs could shake up the world economy in just 10 days. Right now, gold isn't just a shiny metal. It's like a stress barometer for global chaos. If you're confused whether to buy, sell, or sit on your hands, grab a drink and stay with me. Let's talk. US economy still red hot. Let's kick it off with the US, because the dollar is pretty much the main character of this market right now. Last month's retail sales jumped plus 0.6%, way stronger than expected. Jobless claims? Lower than forecast. In short, the US economy is still strong. And when the economy's hot like this, the Fed won't be rushing to cut rates anytime soon, which is bad news for gold. Why? Because gold doesn't pay interest, unlike bonds that now offer juicy yields. So for investors, it's a real trade-off. Gold versus high-yielding alternatives. The Fed's not backing down. A lot of people were hoping the Fed would pivot by now. Spoiler, nope. Fed officials like Bostic and Waller both said it clearly. It's not time yet. Inflation isn't tame enough. Translation? They're still worried about inflation making a comeback, so the market's stuck waiting. And gold, it's not in the spotlight just yet. Global chaos equals gold's best friend. But hold on, even if the US economy is strong and rates are high, there's another side to the story pushing gold up. Let's talk about trade tension. The US and EU are fighting again. If no deal is made by August 1st, the US will slap a 30% tariff on EU imports. Germany's response? We will retaliate. That's not just politics. That's a recipe for serious trade chaos. And when markets get shaky, people flee to gold. Safe, reliable, no counterparty risk. Oh, and don't forget Russia-Ukraine. The US just sent more Patriot missiles and warned Russia, if the war doesn't end soon, harsher sanctions are coming. Bottom line, if geopolitical risks stay messy, gold gets all the love, even without any help from economic data. Global central banks, BOJ, ECB, and PBoC. While we're talking global, let's check in on the other central banks, because it's not just the Fed that moves markets. ECB, Europe. Meeting set for July 23rd and 24th. Most expect no rate change, but all eyes are on their tone. If they sound dovish, aka hinting rate cuts, the euro will weaken, dollar strengthens, and gold might take a hit. BOJ, Japan. Japan's still holding off on rate hikes. They're slowly tapering QE, and the yen is weakening. Result? Japanese investors are buying more gold. Good for demand across Asia. PBoC, China. This one's big. China's been stacking gold for 8 months straight. Just added another 34 tons last month. That's a strong signal. They see risks ahead, and they trust gold. If central banks are loading up, should we really ignore it? Technicals, explained like a friend. Okay, let's peek at the chart. Don't worry, I'll keep it simple. Gold is currently forming what's called a rising triangle. Translation, it's building pressure, waiting for a breakout, either up or down. Support zone, 3320 to 3330. If it breaks, we could test 3280 or even 3260. Resistance zone, 3360 to 3400. Break that, and we're likely headed to 3435. Indicators say RSI is mid-range, not overbought. MACD is in buy zone. ADX is above 33, trend still in place. So technically, gold's not screaming higher just yet. But if we get a catalyst, it might explode out of that triangle. Trading gold this week. What I'd do. If you ask me, how should I trade gold this week? Here's what I'd say. Buy the dip. If price dips to 33.20 and bounces, go long. Target 33.60, stop under 3,300. Breakout strategy. If we break above 3360 with solid volume, long. Target 3400, SL 3355. News-driven trade. If data is weak or headlines get messy, safe haven flows could lift gold. If data is too good, might want to sit back or even short. So yeah, gold's caught in the middle. If the Fed stays hawkish, pressure on gold. But if geopolitical tension flares, gold shoots up. Key events to watch this week: ECB meeting and U.S. jobless claims. I hope this gave you a fresh perspective on what's moving gold right now. If you enjoy analysis like this, hit that like button, subscribe, and turn on notifications. And if there's anything you want me to break down next, stocks, crypto, oil, or big picture stuff, drop it in the comments below. See you next video. Stay sharp.